Saturday evening, so you guys might be willing for looking for some rest and all those things. So anyway, we'll quickly start and move on with the market update. So this is our customary monthly market updates where we normally discuss about what's happening in the economy, what should be your investment going ahead, and likewise. So like every month, we keep our template normally equal so that the data what we are showing over the months remain more or less same and it sync with you. So we'll discuss firstly about the global economy, then we go towards the US economy, and then we come to the Indian equity market and options available right now for you all. And at the end we'll discuss about a little bit of debt market and a gold as an investment. Okay, so these sessions will be roughly around 30 minutes and so whatever query if you have, you can drop by in my WhatsApp. So most of you might be knowing in my WhatsApp number. I know from this, I am seeing from the people who have joined right now. Okay, so we'll quickly move on with the data. So first of all, we will move with what's happening in the global economy. Now, commodity prices are falling amid slowing growth, particularly in China. So this we have depicted data from the 2000 till 2024. So commodity price, as you can see, it is slowly falling, particularly in China. Inflation is showing a sign of easing. Most of the countries that you can see, that the UK, Eurozone, US, Japan, and China, inflation is coming down, and as a result, most of the country are have already reduced the interest rate. Whereas in India, in the last week, we have seen that RBI has yet not touched it. Whereas I have a strong conviction that probably in September, in the US monetary policy, they will increase their interest rate. They will decrease their interest rate. So that's quite happening. And if the US decrease interest rate, and that will be a huge boost. So all of you are thinking that the market as 24 or at 80,000 Sensex level, if US decrease interest rate, that will be a big boost for the Indian economy also. So you can see a new high coming up for the Sensex in that case. So as now globally, what we are speaking, that the data clearly showing from 20 October 19 that all the countries' inflation number are decreasing. Global rate cuts are, I just told you, global rate cuts are underway, Fed likely to follow. See the Fed likely to follow, and this I am presuming with the deep crisis which is happening in US, which you will see when I talk about the US data, that they are probably going to the recession mode. So they will cut interest rate. Now I am seeing probably in September, or they can do earlier than that also. Okay, IMF projects steady global growth in 2024. So if you see all the countries like 23, 24, and 25, see the US, they have a steady growth happening. Emerging and developing economy, although it is albeit low, because of China is coming down, but India is on a different ball altogether. So Eurozone, Latin, South African, and Middle East, and everyone. So all are seeing a steady growth, which is thing happening. Now, if you see the world economic growth, now it is happening in a 3.3 percent level, and this is majorly been fueled by the India. When I show you the India data, you will able to know about it. Now, what are the risk lies right now? I just told you about the US recessions. Second, we have a Israel-Iran conflict going on, unwinding of the yen carry trade, China slowdown, and Bangladesh crisis. Now, yen carry trade last 2 3 days back, you might have seen that the stock market has gone down. A lot of people are thinking it is because of the Israel and Iran conflict, although it has been a factor. But the most important reason is that Japanese yen. Now, Japan, after a long period of time, they have increased their interest rate, and that is the big news, because Japan somehow they are coming into the developing countries uh, in index, so that they have already put forward their thing. If that happen, that can change the geo-economical scenario as such. So this is what is the interesting thing happen in the international level. And we all know the Chinese is slowing down the data. Going ahead, you will also show that thing. And Bangladesh crisis is the recent one. Now, important thing to note here is that Bangladesh has been a economic miracle. They have been growing GDP growing in the 7% in the last 7 8 years. From 2009, Sheikh Hasina has been there, and just see outstated from the country and actually run away from the country. And if you see the Bangladesh graph, they have consistently grown over the last 12 15 years, and it is a very case study for that, because the growth has mainly driven by textile export. they have a huge textile export globally in the world, like H&M and all the big brands. They have taken a huge amount of order from the Bangladesh. Actually, they produce their product in Bangladesh, so Bangladesh is to supply globally all the textile material from there, and that is the reason they have pumped in so much of economic growth there. But the problem lies is that uh, despite that huge tremendous economic growth, they have not focused on any other sector. So all their growth has happened in the textile sector. And what happened in a COVID situations, now the textile industry has gone down. And that is the time when Bangladesh started suffering because they have no other industry to support their internal situations. And that is the reason post COVID, the inflation started boosting up. And as a result, which you can see right away, that there are a lot of and they have not come out from that thing. So as a result, a lot of unemployment happened, and I'm not talking about the geopolitical things which has happened there, but typically this thing has happened. So Bangladesh crisis will definitely impact India as a economically as well as the globally. You can see, although Bangladesh is a negligible factor, but India as a whole that can have a slight problematic, because India do export 34% of its cotton production to Bangladesh for this textile export of theirs. Okay, so that is things to look after. Not a major thing, but yes, there can be a minute impact on that thing also. Iran-Israel war, you all know. So most probably Iran has threatened to do a full-fledged war, but that thing has not happened. But the major thing which I'm looking for is the US recession and soft landing. So that is a big thing happening. So in across all the risk, here you are showing the US recession data is something which is worry about, and that you should be looking forward to. Now, US recession or soft landing, I will discuss more this thing on a US chapter, but just quickly show you that US non-farm payroll data for the July has come down below market expectation. The employment rate in US has shoot up, as well as the manufacturing PMI index is down also. Geopolitical risks remain high. So we all know that Russia-Ukraine crisis, the war is still going on, and the Middle East tension and all. So that is remain there. And yen carry trade is unwinding. I told you about Japanese, interest rate hike movement after a long period of time. Chinese bank NPL, non-performing assets, are rising as housing market slows down. If you see this data, non-performing loans, you see the Chinese non-performing loans are increasing. Okay, and they have a net interest margin is coming down. So that is the reason I told you that China is actually coming down. They are cooling off right now. So that's what we have seen in the global economy. So what happening in the global economy is that the major crisis happened in the US recession is forthcoming. We have a Bangladesh crisis. We have the Middle East crisis happening there. Japan has increased their interest rate after a long period of time, and we have that US recession. I already told you about that thing. So that's what is happening, and inflation is coming down in most of the country, and as a result, the interest rate are coming in most of the countries. Despite all those things happening, what we have seen that global economy, they're expected to rise steady in 2025. Okay, so this issues of Middle East crisis, Russia crisis, Bangladesh crisis, and US recession, and Japanese yen, China slowdown, this is something or the other which will keep on happening. But I don't see a major crisis happening, and which is going to impact India for that. Although the Bangladesh crisis is there, but those are crises which will eventually happen. You cannot have a smooth sail throughout the year. So that's what, for your knowledge about the global economy. For the US economy, I'm going to discuss in my US chapter right away. So let's talk about the US economy. Fed is maintaining a very delicate balance between growth and inflation. Now, I told you about that because of this is the very interesting data point. Now, I told you about the US is having a huge problem. When I talk about the US having a problem, they're going to a huge recession. You see, the US national debt per citizen of US is $1 lakh. Debt per taxpayer is $2 lakh. And that is huge. If you see the US federal debt to GDP ratio in 1960, it was 52.58%, and now it is 122.94%. So US actually, their entire growth is fueling by the debts. So they are in a very difficult situation right away. US national debt surpasses $35 trillion. So that's what happening in the US. So most of don't know about this thing. So this is a big crisis for the US thing happening, and they require a huge boost of their economy. And for that reason, I guess the Fed has been controlling their interest rate for a long period of time because the inflation was higher. But since the inflation is cooling down there, I presume that they will reduce the interest rate very soon. And if US reduce interest rate, you will see next level of FII flow towards India. Okay, so that can happen anytime in September. Okay, so we are expecting that will not happen this year, but this data is very difficult for the US economic point of view. So that's why they have to move fast to move out from this data point. Okay, US growth. I told you, US growth is fueled by the debt. You see the data. US Federal Reserve. This is household. This is not business. US federal debt net interest payment to GDP at all-time high. So US federal debt net interest GDP is at all-time high. If you see the graph from 1790 to right away, this is the net interest payment to GDP debt net. So it is an all-time high right now. Every new dollar of debt generated about 0.58 dollar of GDP. So dollar increase in GDP for every $1 increase in national debt rolling 5 years. So you can understand what I was telling you from the data itself. US manufacturing moves into contractionary period. I showed you in the last slides also. US and weakening in the labor market, the unemployment things are increasing there. US housing market continue to remain expensive. S&P is expensive but at historic level. Now this is important. Like when I talk about the Standard and Poor 500 index, which normally is a benchmark of theirs, as well as we have a Nifty and Sensex. If you see the price earning, forward price earning in the US right now is 20.69, whereas the 30 years average is 16.73. So it is nearly about 20% approximately market is at premium in US right now. Okay. Berkshire sale of equity securities record high, and that is the reason the Berkshire Hathaway, the famous investor Warren Buffett, they are selling their stocks at a record high level right now. The Fed is featuring on earning calls like never before. So that's what I discussed about the US market. You have seen the US in a deep debt crisis, although their inflation is coming down. The interest rate is still high, so we are expecting the interest rate to come down there. The unemployment rate are increasing, the manufacturing PMI is coming down. The debt to GDP ratio is at all-time high right away. And S&P, the index out there, is at 20% premium trading in the US right now. So most of the big investors are selling their stock in US, and I presume that since the interest rate will come down in next couple of weeks or months time, you will see a fresh flow of market in the Indian market as such. So that's what we discuss about the global market. That's what we discuss about the US market, and then coming back to the Indian economy. So if you see the headlines, IMF raises Indian FY25 growth forecast to 7%. Now, I told you world economy is growing at 3.3%, and see that how India is growing. India will be growing at 7%. Indian International Monetary Fund. So CPI inflation is June 4-month high at 5.05, and that is the reason RBI has not decreased interest rate right now. IIP growth to 5.9%. GSEC demand rise to 4.8 lakh crore as new LCA norm come into play. So India added 4.7 crore jobs in FY24, 6% growth of double the previous year. So RBI data. So what we are talking about is that though there is an unemployment problem in India, but the data actually shows that we have added 4.67 crore jobs in FY24. Now this probably might not meet the demand requirement I have, but we are doing this thing. Indian merchandising trade deficit narrows to 20.9 billion in June. Budget strong fiscal consideration. We are not going to do each and every slide. So normally we have seen in the budget. I have mentioned this in details in last month session that we have a strong fiscal consideration path in the budget. High frequency data indicators are positive. So if you see the railway freight, see from the March 24 June, so all across segment we are extremely positive right away. Economic activity is all-time high. So that's the data which we are showing here. GST collection month on month I have been showing you. So if you see April normally will remain high, because of certain internal factors. But if you see the normal range right now, it is 1.7 in an average right now. And now this GST collection was earlier used to be in a range of 1.2 and 1.3 trillion. So right now it has moved up to 1.7, 1.8 kind of range. So which is a very good from the government point of view, because they're giving a steady collections as far as the tax revenue is concerned. Manufacturing PMI in the expansionary zone since July 21. Indian infrastructure efficiency improving. Now, this is an important data point. Now, I have put across all the important infrastructural parameters here, and I've done a comparative analysis from FY14 to FY24. Now, if you see the freight rail speed, now in FY14 it was 25.9 kilometer per hour. Now it is 37.8 kilometer. If you see the power share of RE in generation, in 14 it was 5%, 113%. If you see the port turnaround time, it has in 14 it was 10 days, and now it is 3 days. Now this actually, you will see that what this is, but if you see carefully analyze this thing, it has extremely improved the productivity of the India. Now if you see the road construction per day in FY14 it was 11.7, now it was 33.8. So that is the kind of growth that is had. Airport capacity utilization of top 6 airport, it was 85% 14, and now it is 114. So we have all increased over the period of time. Investment to rise, infrastructure investment, I have already told you, to rise 6.5% of GDP by 2019. So that is the reason I have been insisting all my investors to look forward to those stocks and funds which are basically towards infrastructure and economic reforms path. Okay, so there you will have tremendous growth from going ahead right now. Okay, investment to rise to a peak of 36.2% of GDP by FY 28-29. So that's a couple of data points which I was telling you. Capex decelerated as contract awards and new tenders softened in the election period. India's share of world export rising, especially for the services. Now, this is another important data point. World good export share, see the data point from December 12 to till now, it has constantly been rising. World service export share. So you can see the data comparative analysis over the period of time. So Indian share of world export is rising, especially in the service sector. India at 4.7 crore job in FY24. This data is from RBI. So you can see how the job employment rate growth has happened in India. Oil prices has fallen 12% since August 2023. Monsoon this year, thankfully we have a very good monsoon happening across India, and that will not that push up much inflation towards the agricultural sector, and that will give some breather to the RBI also. So next cycle, when you have the new inflation data comes up, I presume that an inflation number will be much controlled from here onwards. India among the top emerging markets. So if you see all the emerging economy, now if you see the real GDP growth, PMI manufacturing, export growth, CPI inflation, import exchange, stock market capital. You across all segment, you will find India is much ahead than most of the countries here in this developing economies. So that is the reason why I am telling you this thing, that since the interest rate in US might come down, as I told you earlier, next fresh flow of money from those developed market to the emerging market will definitely be in India right away. So that's all what we are talking about India right now. And so you have seen the data of US, you have seen the data of global, and you have seen the data of India. So that clearly tells you the very bright spot that we are looking, that we are sitting away right now. And couple of things I want to mention, that people are telling me that market is an all-time high at 80,000 level, or at 25,000 level. So when I talk about the total power demand of India, now power demand in Delhi, if you're staying around Delhi, this year we have a huge power demand in Delhi. Now tell me, in next 2 to 3 years, when the power demand comes down, it will go high from here itself. Now I tell you another interesting data point. Now if you look in what is the Indian highest grosser movie of Indian all time? That was in Dangal. Dangal has collected 2,000 crore in India. That is the highest grossing movie all time in India. You see from the Saknik data point. Now if you see the Hollywood movie, you know Avatar is one of the highest grossing movie of all time in Hollywood. That has collected 30,000 crore. vis-a-vis India, highest grossing movies collected 2,000 crore. So when we are talking about growth, now we have not seen growth, and that is so Indian highest grossing movie is not even 10% of what US has done. So when we are talking about a growth, so at that 80,000 Sensex level or 20,000 level, we are seeing that the market is all-time high. It is not all-time high. It is the new benchmark that is happening. Obviously, the market every year will grow, and you will see the every year market will going high all time. And with the kind of data that we are coming up, and I will show you in the equity market data, I presume in the next 4 to 5 years you will have a fantastic time staying in India, investing in India right away. Okay, so let's look at what the equity market holds for you. Indian contribution to the global market cap is an all-time high. So if you see the Indian contribution to the world market capitalization, now in 2009 it was below 3%. Now it is 4.4%. So that's what I am telling you. Market capitalization to GDP at an all-time high. Now that is the one data point that Indian market is costly right now or cheap right now. So this data actually tells you is that a little bit of higher up as far as the market cap to GDP goes. Okay, so this is an average. The data point average is 85%. Now Indian market cap to GDP ratio is 142. So it is near about has increased a lot. Okay, so this data is actually in the last couple of weeks back. So probably it has corrected a little bit, but it is still hovering around in the range of 140. So we are a little bit costly as far as the stock market index goes. Okay, market cap and PAT both are now the interesting data point. I told you the market cap is rising, but the important thing is that the PAT is also rising. PAT is profit after tax. So if you see the data point from FY10 and now FY24, so this is the data point, right? Total PAT in billion. So 3,389, and now it is 15,199. So that's the kind of profit after tax has grown over the years. So when we have profit after tax grown of all the listed companies so much, like it has grown nearly 35%. And if you see the total market cap, if you compare this thing, it has grown also the same ratio itself. So the high market cap to GDP ratio, although it is there, but since we have a higher EPS, earning per share, so that doesn't impact much in that level. Valuation at a premium. Now, this is an important data point. If you see the Nifty PE ratio, it is right now trading at 21, which is the average is 18.5. I remember I told you about the US economy. The S&P index is trading at 20, whereas the inception is average 30-year average is 16. So there are 20% premium. So here we are approximately 14% premium right now. And if you see the mid cap and small cap, yes, they are extremely at premium. But mid cap and small cap, I presume, will remain at premium level because the kind of growth that is happening in the small cap and mid cap space, as far as the profitability goes, is tremendous kind of thing. So, if you are looking to invest right now, I told you about the infrastructure and economic reforms themes project companies and into the large cap, which you should look out for. Okay, but in small and mid cap space, you should be a little bit of cautious about investing. I will not be taking any company's name here because that is not allowed for me to speak in a public forum. That you can discuss with me separately. Okay, so I am talking to you that you can look out for the large cap segment as an investment avenue and in the infrastructure and economic space. Plus, there are two more sectors which I will very bullish upon, which I will tell you in a subsequent slides. Changes in the Nifty composition reflected in valuations. So I will just quickly move on from here. Domestic ownership versus foreign ownership. See, what is happening is that the last couple of days back, when the market fall down, we have a 8,000 crore FII pulling out money from India, and the same day the DI has also pulled out money into India. DI has pulled in a lot of money into India. Now, another data point which I want to tell you is that now EPFO, like Employee Provident Fund options, this year budget government has mentioned that they are going to give every new joinee, first time joinee, 1 lakh rupees into their EPFO. They will not give into their hand. So whosoever is taking a job for the first time, they will get 1 lakh rupees in their EPFO account. And that's a huge data point. Remember, when you are investing, when your company is investing in your EPFO provident fund, 15% of the provident fund money is going in the stock market. equity market, which was not there earlier 4 5 years back. So that's a huge money, and government is contemplating to increase that 15% to the 25% level. So that's the kind of flow that will automatically come in the equity market. So what I mean to say that the liquidity will always be remain high in a Indian stock market. So if you are worried about FII pulling out money and something happening or this and that, but there will be constant flow of money into the Indian equity market via EPFO, via NPS, and and if you look at the total SIP book, total insurance flow into the Indian equity market auto book, that's a huge numbers out there. So these huge numbers will definitely will push the market higher up and will not let the market go down even if there is a drastic thing happening. There can be a small here and there impact because of the global thing which I have discussed, but I don't see a huge deep cut into the market because you are going to have a huge flow by way of EPFO, NPS, huge amount of SIP flow coming up, and the domestic insurance investors which are pulling out the money into it. That exactly is showing. If you see the from 2028 data point out here, see the kind of domestic flow that is happening. Although the FII are pulling out money, but domestic are increasingly investing in India. So, of late, we have seen the FI as 10 buyers. As I told you, in the month of August, September, October, you can see the FI coming back to India because of the interest rate fluctuations out here. So, this is normally in the bracket is a negative when FI pull out money from India, this is the positive thing. So, I've given you an example of all the countries out here where they are putting in money and taking out the money from India. India is a new China. I told you about this thing. So, this is the interesting data point. If you see the MSCI index, India and China, from 2021 post COVID, India has started moving up. See the EPS level and see the China's EPS level. So that's what happening from after 2021, just after the COVID situations, India is moving upwards and China is moving downwards. Okay, so that's what as the corporate earnings goes. So price earning. So I have shown the large and small cap performances, PSU Lally, NSC 3, and I just quickly move on because there's a lot of data point out there to discuss with you. FY25 earnings summary. So again, I will move on. If you see the data in the sales figure, uh, EBITDA and as a PAT, including financials and all, see the companies which are there, every company is a year on year, they have a growth in the sales figure. So if the revenue is growing, as well as if you see the EBITDA of the earning before interest year on year and as well as QNO and FY 2025. So if you see the data point out there, so yeah, so if the sales is growing, then you don't have to worry about that thing. It will eventually come up with this thing. So PAT, including financials, if you see, uh, pairing Nifty next 50, you have seen that there is a growth in year on year as far as the profit after tax. Okay, so that this data and this sales data are important. Okay, so that's what is happening. So if there is a sales growth happening, if there's a profit after tax happening, so you don't have to worry about market cap going high. Okay, because there is a huge inflow happening, the market cap will remain high, with cap will remain hot in India itself. uh, Earning expected to remain robust with market cap follow. I told you earnings, whenever there is an earnings happening in the company level, so you don't have to worry about too much about market will fall or no. So market will fall definitely if there is no earnings. So what we are talking about is that I already told you have to be a little bit overweight in large cap. So look for consolidation in the large cap sector, and mid and small cap you can start looking for a bit profit booking kind of thing right away. uh, Many stock are delivered return. So this is the kind of 1,000% return, in January 22 August last 4 years. This is an absolute return. 43 stocks are out there, and I have figured it out how many companies have given how much kind of return. So imagine 1,000% return, 43 companies. That's a huge numbers. Okay. Uh, and just to tell you that if you think that this has happened in the past, I can see in the next 4 to 5 years this number, you can take out the picture of the slides, this number will double. So there are companies, a lot of companies are getting listed. Couple of days back Oyo has been listed. There are a lot of companies will be listed in India, roughly around 6,000 to 7,000 listed companies, and US there are 3 lakh listed companies. So as India is developing, you will see the next couple of years these numbers of 6 to 7,000 will move up to 40, 50,000 listed companies in India. So huge amount of IPO are coming up. So don't worry about this kind of options, because you will have a plenty of options coming up in next 4 to 5 years where you can really make great money. Many stock are pricing as rapid growth. Just move on. Moderate return expectations. Okay, market cap contribution to small and mid cap, as I told you, small and mid cap are high. Now, this is another important data point: sectoral index performances. So, if you see the last 1 year, auto sector has given 70% return, and last 30%. So, if you see all the data point out here, now which data point is showing you relatively cheaper? I see the Nifty Private Bank Index. So in Nifty Private Bank Index, they're giving 9.8% return in last 1 year, 3 year 12%, and 5 year 10%. So normally, in a private bank, they are giving normally fixed deposit rate at 7.5%. And if you see in the private bank stocks also, they are near about 1 or 2% higher. So apart from all other segment, private bank has not increased. The SDFC bank, it's one of the finest bank in India. ICICI bank, one of the finest bank, their stocks has not improved over the couple of last year. But having said this thing, although they have not increased, it looks very promising that you should start parking your money in a private bank. But I will say that last week they have a white paper consultation in a RBI for liquidity enhancement discussion, and which they have already placed, the economic committee has placed in RBI. So if the RBI accepted it, so there can be a little bit of drag down in the private bank. So that's why I'm saying that. So wait for next 2 to 3 months, probably not 2 to 3 months, 1 or 2 months probably, and look for the private bank, because if that white paper get accepted, you can see another 10 to 15% dip in the private bank stocks, and then it can bounce back. So investing right now and then you get a dip of 10 15% and then coming back, so it will not be a wise idea. So wait for 1 and 1.5 months kind of, so and then definitely look for private bank to invest upon, and that's where you can make a lot of money out of it. And here I can say that FMCG, the consumer sector, is another interesting data point. And if you see the IT sector, which has not grown much, it has started moving up. So the three couple of sector, what I will say, infrastructure sector, although it has given tremendous return, but there is still a scope. We see in IT, consumer, and private bank, not right now, probably 1 or 2 months from now. So these are the couple of sector which you can look out for in an investment. Okay. Consumption, and I told you consumption and take areas to watch out for. See the consumptions. So opportunity to invest in the India country's aspiration, 58% of domestic GDP driven by domestic demand, and technology growth in IT service spending is on the rise. So these are the two sectors that you can look out for. We ready for volatility. So Nifty at 24,000 level. So 26,000 जाने के लिए soft yielding, softer oil price, favorable Indian macros. What are the negative side? Global recession, rate cut delayed, risk to earning trajectory, and supply of paper. Okay. So that's all from the equity market. I have given you details about the market. So we'll quickly move in the debt market. So inflation is cooling down in US. Again, the same data point. I just quickly move on. And an interesting data point which is happening is that right now, I told you that Indian inflation is on the edge in a higher side, with the inflation expected to come down after a normal monsoon. You can look out for investing in a long duration bond paper. So if you are investing in a long duration bond paper, with the inflation, with the interest rate coming down in next probably quarter, and so the yield of the existing bond will go high. So that is a very good opportunity. You can get a double digit plus return in a bond segment, a long duration bond segment, if you are investing right now. So the interesting aspect of investment right now in equity segment, I told you about the infrastructure, IT, consumer, and private bank probably 2 3 months from now. And in government bonds, a long duration government bond, that also looks very promising right now with all the data point that I'm showing you. So I'm running out of time right now, but anyway, I just quickly move through uh, Indian fiscal consolidation. I'm not going to go through all the data point out here. So this is the fiscal deficit, percent of GDP. So that's where we are expected to reduce from here itself. Market borrowing under control. So June CPI inflation, fourth time high. I told you June CPI inflation a little bit higher side. So if it reduces in next quarter, so you can expect a rate cut from here itself. That's why RBI has not reduced the rate cut. Uh, so I just quickly buy I told you buy long duration paper, which is a very interesting thing. So buy a long duration bond paper right away, if and hold for 1 or 2 years. I'm going to get a very good double digit return from it itself. Okay. So gold. So we move about from debt market to the gold market. That is the kind of return, trailing return in the gold which we have seen here. So what happened that there has been an import duty, 12% import duty on the gold, and that's why the price has come down a little bit. But there is a huge chunk of gold buying happening across the globe. The Russia, China, they have been buying gold like anything, and that's why the price is move up. And with the dollar, with the dollar kind of pressure happening, with a lot of countries are trading in their own currency, gold will get a new demand across. So I suggest you to invest in gold and silver in through ETF mode. But gold investment should not be very aggressive. Like if you have 100 rupees as a total asset of yours, not more than 10 rupees, including your physical asset, physical gold, should go towards a gold. Okay, so that's what I suggest to you. Gold share of global international reserve jumps. I told you right away that a lot of companies, if you see the US dollar, yen, and French, so a lot of countries are buying gold like aggressively. Now, couple of data points before I finish it off today. Fed call as of now. So that's the Fed call. I just move on. Central bank policy rates. So you start seeing the Japan and all those. See the hike. Japan has hiked the interest rate and cut. I have already showed you has done rate increase and rate cut. So you will see that most of the banks are going with the rate cut very soon. Four possible way to the yen. I am not going to discuss this. It will take a long time, but just imagine that Fed has Japan has increased the interest rate after a long period of time, and discussed the consequence out of it in a couple of minutes ago. S&P 500 performance post cut. So that's what happened earlier. So what we are expecting right now, post cut, what is going to happen? So if they decrease the interest rate, obviously the market has gone negative in most of the time, but there are some patches of positive return also. So so moving on, performance across global asset class. So this is a bit difficult thing to show. Like every year, you will see in 2022. So this is the highest return. Crude has given the highest return, and then the other Nifty. So what this graph tells you is that every year, new asset class perform, whereas the old asset class change. It is not that the one asset class will perform every year consistently. So in 2023, Bitcoin has given a highest return, okay, whereas the Nasdaq has a second performance, followed by the Nifty 500. Now in 2024, Bitcoin is still in the highest, and gold is still at the highest level. So that's the kind of change this will keep on happening. So as a investor, you need to keep your investing as per your needs, as per your goals and aspirations, okay, and discuss with your financial advisor which asset class you need to pick up to meet your aspirations and goals. So global fund index, so MSI World Emerging Market India Index in the last 3 months, you will see the in the last 3 months Nasdaq and India has performed well. So why I am saying the US market, because I told you US market has gone high, extremely high, and they are trading currently 20-24%, which is not normal for them because they have been constantly moving up and up. So that's what we are expecting, the interest rate coming down. So what's going to happen out there? Last where we have shown, and so that's all data points. So if you see the Indian data point out here, Indian MSCI index, so that's the kind of return India has generated, is highest across all countries and taking forward. So domestic price index, I've already shown you this data. I have already shown you. Again, if you see the energy index, I did a little bit of details out here. Energy index last 3 months. This is another sector you can look out for. Okay, bank index, I told you to stay away from it. So if we are seeing the last 3 months data point, this is the number of data which I say BSC industrial index. So that's what I'm talking about. Infrastructure and industrial index, consumer durable index. So these are the couple of segment which I told you: consumer durable index, IT index, bank, obviously bank index. Bank means non-PSU bank, the private bank index. So these are the couple of segment that you can look out for investing in. The shareholding of private promoter declined to 38% from 41% in December. Uh, so that's mostly meeting this thing. So I just quickly move on. Earning expect. So Q5 earning sector wise. So if you see the earning sector wise revenue growth, auto in line, chemicals, construction has beaten. So if you see the all the segment out here, most of the earnings are in expected line, and that is why the stock performance are also in the line of that thing. You have not seen the deep cut. Apart from couple of segment, is very two three segment. This is metals and mining and realty. Realty has come down because this data is actually as of 31st. So what happened that post the budget session, because of the capital gain taxation issue, it has gone down, but it has moved up because last week what happened, the government has given godfather clause till July. Those who have bought property July and back, July 24 and back, they will get that indexation benefit. So property has moved up from there itself. So you can see the all the segment which is in line and performance is in line as such. Sector valuation. So this is important data point, sector valuation. If you see automobiles P, if you see the capital goods P, construction, PSU, private banks. That's what I'm saying. Private bank is one of the most attractive segment right now. Most attractive. You can make a plenty of money in private bank, but peak costs it can go down a little bit, 5 to 8% from here, as I told you. So this is the cheaper segment as far as the all the segment which is going up here. So what all segment are cheaper? Now this is consumer discretionary. I told you the consumer discretionary is another segment you look out for. Okay, this is normally is in an average level out here. It's so July 4, if I step up buying, I told you at the data point. I just quickly move on. Please, Forex is up to a record high. Oil and precious metals on significant trade. So most of us, I have covered it. Listed companies market cap surpassed 5.5 trillion. Okay, so capital markets see a rising share of household flow. Contrast between GDP growth and corporate earning growth. So GDP growth, and if you see the corporate earning growth. So that is the GDP growth, which is 2003 to 2024. And if you see the corporate earning Nifty 500 PAT, so that is very important data point. Like this two has to be in a sync. Okay. So, but here itself, the corporate earning has grown in a 5.4% CAGR, where it has grown at 10% CAGR. So this tells you that there is still a scope for a growth in Indian market. Okay. Uh, Moving on, market swing, more of economics and corporates. And okay, so that's all from my side. A lot of data point I've discussed today. Okay, and I hope things are clear to you. So, in a summary, what I can tell you is that so in an equity market, in an Indian equity market, uh, we will continue to see huge domestic inflow by way of by way of provident fund money coming up, NPS money coming up, huge SIP and insurance book which has already been there, and there is a huge amount of domestic flows coming up by the retail investor. So that will help keep the liquidity intact. So deep market cut from here itself, people are expecting Sensex at 80,000 level. It can go down at any, 10, 15, 20% down. It will never happen because we have plenty of liquidity in hand until unless there's a world war happening. Second thing is that the segment which you can look out for, definitely private bank looks attractive. But I told you there is a white paper which has been put in RBI. So if that is accepted, it can go down a little bit and they can come back. And apart from that, consumer discretionary, consumer durables, consumer discretionary segment as such, IT segment as such, and infrastructure. These are the segment which you can look out for. Look out for the large cap companies for investing right now in this particular segment, and stay away from small and mid cap. If you are looking to invest in small and mid cap in new IPOs and new companies, then do a little bit of research work whether their price valuations, everything are cheaper and or not, and the company is well under corporate governance. So, and obviously, look out for long duration government bonds. So, that is one thing which I told you right now. Mark my words, this is August, and probably next 10 months from now on, you will see a double digit return in government bonds from now if the interest rate goes down. Long duration government bond. Okay. So, and gold, obviously, if you don't have much gold in your reserve, so do look for a ETF in gold, but not 10% of your total overall asset. Thank you very much for being with me for the last 40-45 minutes. Stay meet you up in next month at the same time. Do drop by in my monthly market update. We gather a lot of data points and show it to you so that you can take your investment call accordingly. Thank you.